I think when you're a new trader, you want more indicators, more filters, more reasons, more ways to avoid making a wrong decision. And then as you get more experience, you get to this point where you can say, all right, it is what I see and I trade what I see and let's go.
Two traders, Darren and Walter, pull back the curtain on profitable trading systems, consistent money management, and profitable psychological triggers. Welcome to the Two Traders Podcast.
Okay, welcome back to part 2. Now, in this episode, what you are going to hear is Darren talking about lucky football jerseys and what this has to do with trading. You'll also hear about the lotto numbers, why picking your lotto numbers is just like being a system trader, who Darren wants to sit down with, and why this person may be able to help out his trading quite a bit. You'll hear all about my story about the Michelangelo art piece. And one of our friends, a fund trader, his secret to success is revealed in this episode, in part 2. It's actually very simple and reasonable, actually, but very few traders do it because it's difficult to do, but it's very simple. And then finally, why your friends are always better people than complete strangers, and how this particular thinking mistake affects your trading as well. All this in part 2. Because I think you're right. I think we can hang our hat on stories, and we use those stories. We look for evidence that only supports those stories. So what do? So my sort of mental exercise that I like to employ for this is I will essentially go, all right, if I'm taking this trade, like for example, as we record this, I sold the pound New Zealand. Okay, so who would be buying the pound New Zealand because I've sold it, and I want to know and write down at least 5 reasons why somebody might take the opposite side of my trade as a mental exercise to try and think about the other side of it, instead of using my confirmation bias to filter out all the evidence that doesn't support my overarching theme and theory and idea, which is to sell this pair, that the pair is going to go down. Who are those people on the other side? This is a really good way, I believe, to help you get mentally flexible so that you're thinking about the other side of it instead of sticking to your own story. Does that make sense?
It does, yeah. And I kind of do the opposite and do.
So tell me, yeah, okay.
Well, yeah. I mean, I do no analysis on my trades, and I try to avoid it at all costs. And I rely on the fact that price has to move, and the idea is if I'm not using any analysis, then I can't be really drawn by the dominant story. I mean, there was a really good example last week where we were all trading oil together, and oil's been in a really strong downtrend for a long time now, and our system gave a buy on oil, and we all took it, and we all lost. And as soon as we lost, one of the traders put a post up. Oh, it was daft to buy oil in the current scenario because it's in a strong downtrend. The very next trade that set up was also a long, and it turned out to be the best trade on oil all week, and oil went long all week. And so if we'd have been drawn into the story, then a buy on oil would have been a bad call, and it turned out to be the best trade of the week. So I just try and remove the story completely from the entry and then just use it on the exit. And the reason being is that if I have to do a story for the entry and for the exit, then I get that information overload. And if I'd have been doing that on oil last week after taking that loss, then I wouldn't have taken the next trade, and that was the big winner for the week for me on oil. So I would have ended up with a losing week. So it's just a different way of dealing with the scenario.
Yeah, and you've embraced it. My question, and I should have asked you this earlier because it's something that I've always wondered, is could you do this, Darren, with the style of trading that you do? Could you have a robot take the entries for you? So because again, you're just blindly, it's going down, I'm selling, going up, it's buying. Because I know you do most of your hard work and you earn the pips on the exit. So could you just have a robot that enters these trades for you, and then it's your job to basically get out of them? So the robot wouldn't do that at all. Would you be open to something like that?
I would 100% be open to it, and then there's only a few reasons why I don't do that. One, I'm a bit cautious about giving my ideas to a coder, which sounds a bit odd, really, because I share my ideas with other traders very freely anyway. So
yeah, yes, agreed.
Yeah, which is completely like irrational fear, basically. And the other thing is, when I've tried to get a coder in the past to write an EA for me, I found it really difficult for me to communicate to him what I wanted it to do and him to make it do it. And that's because I don't really understand the programming limitations of MT4. And so, although he was trying to like make a square peg fit in a round hole, it just still meant that it wasn't doing exactly what I wanted. So in the end, I just decided, well, it'd just be easier to take the trades myself. But also, I think there's a bit of a bias thing there as well. I kind of get a comfort, like I've got some sort of control that I'm placing the orders, even though essentially there are random entries, with no analysis involved. And so, but that's just a comforting feeling. I kind of feel like I've got some control, even though I haven't.
Yeah, and I think, that's why people like to pick their own lotto numbers and stuff like that instead of letting the machine do the random numbers, right? It's the same sort of idea.
Yeah, it's like footballers that feel that they need to have a certain number on their shirt to be, or they won't play as well. It's just it's like a sort of superstition, really. And I just kind of feel better. I think if I could meet a coder face to face and sit down with him and work through it, then I'd be really interested in doing it. And you never know, I might actually trade better that way.
Yeah, because but in theory, you wouldn't really be any different than the robot, because you would always take every signal, like you said in the example of oil, unless of course you've stopped trading for the week and you've reached your goal and you say, that's it, I'm done this week. But in theory, you would take every single signal, wouldn't you?
Yes, but again, there are occasions where, let's say, when I'm trading the 4-hour charts, if my signal comes at 10 o'clock at night, dependent on what other trades I'm in, I might just say, well, you know what, I'll leave it, I'll come back in the morning and see what the situation is then. But I'm not going through like a big list of A, B, C, D to get to that. I'm just kind of looking at it and thinking, how do I feel? Do I want to get into the trade now, or shall I just come back in the morning and see what the scenario is? And, that's kind of hard for people to take on board, because they feel like the system is what's going to protect them. And I think, the system is part of what's going to protect them. It's also kind of that confidence in believing in your feelings and using those in trading as well. And I think if you can get to that point, then you're kind of moving on to another level. But that's my my personal trading.
Yeah, sure, and that makes perfect sense. Yeah,
but I think you do it as well. When I've watched some of your webinars, and you've kind of gone through scenarios, there's been a setup that kind of fits your rules, and you've said, it was good, but I don't kind of like the feel of this. And it's not like really specific things, but it's just kind of an experience thing and a feel thing. And you've said, I probably would have left that trade. And it's the same thing as that, I think. Yeah.
Have you heard have you read the book, I think it's called Blink by Malcolm Gladwell? Have you read that one?
No.
Okay, so there's this guy, Malcolm Gladwell, and I think he's a freelance writer. He's written for The New Yorker and stuff like that. He's got a few books, like Outliers is another one. But I think the only reason I bring it up is because it's exactly what you were talking about. In the book Blink, there's this idea that, at a certain point, people just kind of, and I think trading is like this. You get to a certain point and you kind of just know, like from experience, you can't really put your finger on it. You can't really talk about it. And the cognitive research also supports this, which is at a certain level of expertise, you actually don't have conscious awareness of what you're doing. And in the book Blink, one of the first stories in that book is about this I think it's the Getty Museum in Los Angeles somehow came upon this statue, and they thought it was a statue that was a Michelangelo or something like that. I can't remember exactly who it was. Some real famous artist, right? And they thought, wow, we can't believe this is from Michelangelo or whoever it was. I don't remember, but. And they did analysis, and so they brought in the scientists, of course, and the scientists, took little samples of it and to make sure that it was old enough and all this, and they're like, yeah, it's good, we think it's legit, But in the end, they brought this guy in who basically, really, he was just a gut check guy, okay? And so he's an art expert, and he's the guy that you bring in to say, yeah, that's legit or it's not. And as soon as he saw it, he knew it was a fake. As soon as he saw it, he was like, nah. And it's like, well, what did he do? How did he know this? And it turns out he was right, but he saved the museum millions of dollars because they would, they're prepared to pay for it. But I thought that was a good example of what you were just talking about, which is sometimes you see these on the charts. Sometimes you see these things, and you can't really put your finger on it, but you don't want to risk money on it. And I don't know why. And I know maybe this is probably fits more with people who trade like myself, who do more analysis on the front end of getting into a trade. But I just thought that this idea was fascinating in the book because he kind of digs into this idea of making snap decisions and how our brains are set up to get a lot of experience so that we can get to the point where we can basically make these snap decisions, and how that's kind of the way we were built. But I just thought it was fascinating.
I think in trading as well, though, after a while, no matter how you approach trading, I think, maybe even just subconsciously, you've got to accept that there is randomness involved and luck, and these things are going to play into it. And if you're going to be a trader, you've kind of got to have, confidence in yourself as well, and not just the technicals of what you're seeing on the chart. Even if you're trading in a technical way, you've kind of got to have like a sort of deep confidence in yourself as a trader, and that only comes with time. And I think after a while you kind of stop getting in your own way, if you like. I think early on you try and remove the uncertainty too much, and then you kind of get in your own way and don't feel it. You don't allow yourself to just kind of feel it and go with it, and it's kind of a difficult hurdle to get over. But I think it comes for everyone with time.
Yeah, absolutely. Yeah, and yeah, that's interesting that you bring that up, because remember we had there's an upcoming podcast, or actually there's a podcast that's probably already, if you're listening to this, you've probably already heard the other one, which is with our friend James. And do you remember what James was saying about how his fund had done really well leading up to the big event this year as we record this for 2016, which was the Brexit event? And so he was talking about how his fund made money not because they had any sort of inside information, but because the pound was in an uptrend leading up to Brexit. So they were trading the trend, and they weren't really doing anything other than trading what they saw. And so, he's been wined and dined, and everyone's patted him on the back because his fund did so well leading up to Brexit. And yet he didn't really do anything other than kind of get out of his own way, right? They saw the market going up and they were trading it. And I think that's something that comes, I think, with experience. I think you're right. I think when you're a new trader, you want more indicators, more filters, more reasons, more ways to avoid making a wrong decision. And then as you get more experience, you get to this point where you can say, all right, look, it is what I see, and I trade what I see, and let's go. That, if you're a technical trader, that is. And in a purest sense, well, I guess I could say in the purest sense, that's really what you do, is you essentially trade what you see, at least in terms of the entry side of it. You're saying, well, this is what I see, so this is what I trade.
And I think, really, essentially, we're all doing exactly the same thing, but we're just kind of wrapping different elements around it. I mean, really, we're all waiting for price to change direction, and then we're entering the trade. You trade trend lines or support and resistance or head and shoulders. They're all essentially price was going up, now it's going down, so I'm going to sell, or vice versa. And I just try and remove everything and get it just down to like a single bar. So, if the direction's changed, the bar's closed up, then it's a reason to buy. And, rather than trying to pick the winners, I try and make the best out of the winners that I get.
Yeah, right. That's interesting. And the other thing I'm wondering about is, you mentioned earlier, Darren, that kind of what happens is you get confidence in your trading, and that's one of those sort of side effects of experience. You get to that point where you're very confident in what you do. But I'm wondering if from your point of view, is there a way to sort of hack into that, or is there a shortcut for that? Is there a way that you would say, to get to that point, you can do this, and that might help a little bit to build your confidence as a trader? What are your thoughts on that?
Yeah, it's difficult. I think for me, it's about how you view the market, and I think if you view the market as something that can be determined with repeatable patterns, and your figures are going to be really consistent. So, I mean, let's say you've worked out your win rate is 65%, and your winners are 3R, and you think that your strategy is going to maintain that because of the patterns you're using, then I think maybe that's the hardest way to do it. I see the market as just complete randomness when you're looking at a chart, and all of the patterns I see are just cognitive biases. It's just you wanting to see patterns. All the things that people believe in, that I see people writing about, I don't believe in. And so, my approach is that it's just the movement that's important. And really, my results are going to be random. Is that the right word? I'm not sure. I mean, I don't feel I've got any control over my results at all. I think the only thing that determine my results are that price moves. Okay, and when you were talking about James before Brexit, the pound was in a strong uptrend. Okay, now I imagine the majority of traders were finding it easy to make money in those market conditions, no matter how they were trading, what strategy they use. The market was moving strongly in one direction. I imagine most people were finding it easy to make money. Now they will believe that it's their strategy, their approach, or even them personally, that was making it easy for them to make money. But the reality is, it was the movement of the market that was making it easy. And at the same time, when the market's really congested and sideways, the majority of people, however they're trading, will be finding it hard to make money. So, really my confidence comes from the fact that I don't really have control over the outcome of my trades. The only thing I can be sure of is that markets have always moved, and so if they keep moving, then I will keep making profit.
Right.
Does that make sense?
Yeah. It makes yeah, totally. It makes perfect sense. And I think the psychological idea that you touched on there, which is that people will generally attribute things to their own, when they do well, I'm such a great trader, or my system kicks ass, or whatever, and this is why I'm so good. And then the other side of that is what they call in psychology the fundamental attribution error. And the fundamental attribution error is basically this idea that if it's me and I'm doing something really well, then it's me. I'm so good. And when I don't do something so well, it's the situation, it's the environment. And so in trading, the way that translates is the pound's going up, I'm buying the pound, I'm doing really well because I'm such a great trader. And then the pound goes sideways and chops around a bit, and I'm still trading the same system, and I don't do well. So the market's changed. The market's difficult. The market, my system is not working. My system is broken down. My system needs a new tune-up or a filter or whatever. So that's the difference in the point of view. And it works the same way for your friends. So if you have a situation where your friend is accused of animal abuse, other people look at your friend and say, "Oh my gosh, what a horrible person! Did you see what he was accused of doing to his dog?" And then, but you know the person and you know the situation. You say, "Well, they had this pit bull dog that they were dog sitting for a week, and they have a little toddler, and the dog kept nipping at the toddler, so the guy kicked the dog." He's not really an animal abuser. It's just the situation was that he was worried that the dog was going to go for his little kid's throat or something like that. You know what I mean? So that's the kind of way that we think. And it's a normal way of thinking where we sort of put all of the emphasis on internal ourselves, how great we are when things go well, and when they don't go well, it's not really us, it's the situation, isn't it? I mean, I think that's so true in trading.
Yeah, so when you look at your results, you have to consider, the market conditions, and then you need to be judging your performance on kind of the human errors that you made within that. So, you could have actually had a really profitable week, but made a lot of errors, and so although you've made money, you should be looking at that and saying, well, I didn't trade well, and we don't really do that. But it doesn't really help people with a shortcut for gaining that confidence. I wish I could kind of come up with some really good tip for that, but I can't think of any.
Yeah, exactly. I mean, how do you become more self-aware, right? Yeah, I mean, you can't. I mean, it's a difficult one. You can try different things. You can try and picture yourself from a different perspective, or maybe become mindful and meditate, things like that. But it's not an easy one, is it? It's a very difficult one, I think, to tackle. So. Yeah, so Darren, this has been an interesting session. We sort of meandered our way from storytelling and through biases, but I think it was a good one, and I've enjoyed it. Any closing thoughts?
No, I think we've covered a lot there, but it's interesting. This notion of storytelling is interesting, and I just perhaps traders can look at how they're trading and whether that really is the best way to trade, or whether it's just the dominant story of the time.
Yeah, and to question that, right? To make sure that you're always questioning that. I think that's where we've talked about this in other episodes, but I think that's where the really influential people make their mark, is they come into a certain area of society, a certain science or something, and they question. They say, well, why don't we try this way? And they go off in a different direction. Most of the time, those people are ostracized, and they've basically sealed their fate. But occasionally, people take notice and they say, "Oh, okay, well, maybe there is something here." And I think that's for you as a trader, and to grow as a trader and an individual. I think it's important for you to make sure that you are aware of the dominant point of view, the dominant theory, and how people are approaching things, and try and just step outside of that for a moment if you can, and say, okay, well, if I were to do something completely different to what I view as being correct, what would that look like? And what would other people who are doing something completely different to what I view as correct be doing in this situation? I think those are cool mental exercises that you can do. And if you do them regularly enough, then you are able to take the other's perspective, but it's certainly not the way we're built. We're not built to do that, that's for sure. Yeah. Okay, Darren, next time you have an interesting topic that I'm excited to talk about. What is it?
Yeah, it was about this idea that brainstorming and kind of getting together in a group to come up with new ideas, how we've been doing it, is apparently all wrong and not very effective.
Yeah, that'll be interesting. I'm looking forward to that. So we'll see you next time.
Cool. Cheers, Walter.